Look at an extension to activity-based costing, and that is called activity-based management. Why do I say it's an extension? Well, activity-based costing was costing the product costs, the direct material, the direct labor, and the overhead. Now we're going to look at the period costs within an organization. We're going to look at the cost of running the organization, of the purchasing department, of the accounting department, of HR. We're extending that. Every one of those departments are consuming resources by performing activities. And just like in activity-based costing, if we can take the pool, just like in activity-based costing, we can take the overhead costs, put them in pools, look at the activities that drive the cost in that pool, and then manage those activities. Instead of focusing on the cost, focus on the activities. So management here can pinpoint ways to improve operations by reducing costs and increasing value. ABM improves management focus on the firm's critical success factor, and therefore and thereby enhances the firm's competitive advantage. Now, when we talk about activities, the first thing we're going to do is we're going to distinguish between an activity that is value added and an activity that is non-value added. As I stated before, activity-based management is an extension of activity-based costing from product costing system to a management function that focuses on reducing costs and improving processes and decision-making. So we look at these activities and we define value-added, non-value-added. For example, a value-added activity is an activity that increases the perceived worth of the product or service. Perceived by who? By the customer. A way to look at this is, if I reduce this cost, will the customer perceive a reduction in the quality of the product or service? If the answer is yes, then that is a value-added activity, and you better be very careful in reducing the costs of a value-added activity. In a manufacturing company, we're looking at engineering design. If I reduce the amount of money I spent on design, quite likely there would be a reduction in the perceived quality of the product. Machining service, assembly, painting, packaging. In a service company, performance surgery, legal research, delivery of packages. Those are all activities that consume resources, but you must be very careful in trying to reduce the cost of those activities. In a non-value-added activity, that means that activity, if we reduced it, the customer would not be aware. For example, the storage of inventory. If we reduce the amount of storage space for inventory, that has no perceived reduction in the value of our product. Maintenance, inspection. These are all activities that are performed and need to be performed in a manufacturing company. However, these activities add no value to the perceived quality of the end product. In the service area, taking appointments, reception, bookkeeping, and billing, we can reduce the number of times those activities are performed and therefore reduce the costs. So the focus here is not on costs, but on reducing the number of times an activity is performed. Value-added activities, again, is an activity that increases the value of the product or service to the customer. A high-value activity increases it significantly. A low-value activity consumes time, resources, or space, but adds little or does nothing to contribute to satisfying a customer's needs. So that's how we look at now in the period costs, all those activities, and then distinguish value-added from low-value-added. Now, once we have the low-value-added activities, We can begin to eliminate them or reduce them. Can't be eliminated because the incurrence of these activities decrease our profitability and our competitiveness. And so therefore, as a manager, this is where you focus your attention. Classify each of the following activities within a water ski manufacturer as value-added, non-value. Inspection is always non-value-added. You should produce it right the first time. Storing raw materials and machine setups, non-value-added. Installation is. Packaging is. Rework is a waste of time. You should do it right the first time. So it's a non-value. You see, inspection and storing and reworking are activities that consume resources, but they have no impact on the quality of our product. So activity-based management goal is to improve the efficiency and effectiveness of operations by analyzing and costing activities. Again, the ABC focus was that we are producing a product or service, so we looked at the activities that were consumed in the production of that product or services and the resources related to those activities, and then we assigned the cost, the resources, to the products or service based on the consumption of activities. In activity-based management, the focus here is to improve the efficiency and the effectiveness of activities. Resources are traced to activities to facilitate the evaluation of those activities. And of course, you then focus as a manager on the non-value activities. Again, in summary, activity-based management: determine the major activities, identify the resources consumed by these activities, all right, identify ways to improve the efficiency and or effectiveness of the activity. In short, define the activities that you manage, identify the drivers and the activity measures, develop performance measures, and manage the processes and work, not cost. Look at the activities. If you can reduce the activities, the number of time of activity is performed, you will be reducing the costs. Now, another way that activity-based management has improved management skills is in this fashion. We look at the customer and we perform what we call customer profitability analysis. We are going to analyze the revenues earned from each customer and the cost incurred to earn those revenues. Now, the revenues are easy because those are the sales we made to the customer. But in the consumption of the cost incurred, it's not incurred evenly by each customer. Some customers are much more demanding. Some customers order in very small lots and want want deliveries. Okay, but companies must realize that each dollar of revenue does not contribute equally to income. Differences in the characteristics of relationships between the company and its many customers can be accounted by dramatic discrepancies in customer profitability. So there can be revenue differences because I'm giving discounts to the wrong type of customer. Difference in cost because that customer may be consuming more of our delivery costs or more of our handling cost. They're making a lot of small purchase orders, difference in distribution channels, and difference in customer service levels. So the key features of customer profitability analysis is that it follows through the whole entire value chains. There focuses on the many transactions of a customer with a customer. It emphasizes multi-products and customer purchases, and it can separate costs so that they're customer specific or aggregated to whatever level management wants. Therefore, other factors in evaluating customer profitability, likelihood of customer retention. Yeah, we don't want to lose all customers. Potential for sales growth, long-run customer profitability. We want increase the overall demand from having well-known customers and the ability to learn from our customers. The conclusion here, as companies realize the potential benefits of measuring customer profitability, many opportunities will open up. So I think you can see how the management focus in the last 10 years, which came out of activity-based costing, has now led to activity-based management. And the whole idea here is the same in activity-based costing. That is, activities consume resources, and resources are consumed in satisfying a customer. So as activity-based costing is in place, it can easily be extended to activity-based management. And companies now are looking at customer profitability analysis. And many companies are also looking at supplier profitability analysis. And that's a whole new field in management.